Welcome back to Alpha Recap, your end-of-day market rundown from stockalpha.ai. As always, if you have questions, you can reach us at stockalpha.ai. Ready to dig in?
Yeah, absolutely. The market gave us a lot to talk about today.
So, headline first. Markets closed up across the board with a tech-led rebound. The broad S&P ETF finished the day up about 0.75%. The tech-heavy NASDAQ 100 surged about 2.5%, and small caps rallied roughly 2%.
Big move for the NASDAQ. That definitely made it feel like a real rotation day, not just a one-off.
Exactly. Chips, materials, and parts of the energy complex were the real engines, and you could see money flowing out of some of those giant defensive names into cyclicals and semiconductors.
Right, and when you step back and look at this, it wasn't just one headline. It was a few things lining up that let risk on come back.
So let's break down the why. First, semiconductors had some momentum. Market chatter about buyers stepping into Micron and renewed interest in chip ETFs really lit a fire under related suppliers. Intel bounced too, which helped the whole space.
Hold on, say that again? Micron was the focal point? That sounded like the catalyst.
Yeah, Micron headlines drove flows. The idea is memory stocks can move fast when buyers show up, and that lifted the chip supply chain. Analysts note momentum tends to compound in this space.
And that fed into the NASDAQ outperforming the S&P, which makes sense since the index is so tech-heavy.
Exactly. On the other side, materials and mining names picked up steam, partly because industrial demand tone felt firmer and commodity sentiment improved.
And energy also joined the party. Reports about progress on an Iran-related deal reduced near-term supply fears, which pushed crude higher and helped oil producers.
Which is a good example of how geopolitics directly feeds market flows. Less perceived supply risk meant commodity prices ticked up, and that spilled into integrated producers and service companies.
Banks got a little love too, right? MA chatter was in the headlines.
Yeah, banking sector MA rumors and a calmer macro backdrop. Market notes called it macro calm, took some of the pressure off risk assets. That helped regional banks and select financial names, although moves were uneven and still headline sensitive.
Notice that. Some pockets move more than others. Makes sense.
Let's talk sectors and standouts. Semiconductors and hardware were the day's most visible winners. Materials and mining showed momentum. Energy rallied on the Iran headlines. Financials saw selective gains thanks to MA chatter. Real estate had pockets of deal-driven strength, industrials firmed up, and utilities and consumer staples lagged in places.
Yeah, that tracks.
On individual names, Intel bounced and helped semiconductor optimism. Micron was a big focal point. Accenture slipped amid some mix and margin concerns. Not a great look for the consulting name.
Honestly, I was a bit surprised by the Accenture pullback. Services names had been relatively steady.
Analysts noted specific issues with mix and margin pressure, which was enough to make the stock give back ground during a broader risk-on day. Gilead was in sector write-ups. Analysts reiterated differing views on pipeline valuation and dividend support, so it stayed on watch lists.
And retail had its moments. Dix was still digesting first quarter commentary. Margins and inventory were the headline drivers there.
There was also a trim of a stake by Giverny Capital in IBP, which is the sort of activist flow that can create short-term pressure or longer-term repositioning in mid-cap names.
Plus, we can't ignore crypto. On- and off-chain data were mixed, which added a layer of complexity for digital asset-sensitive equities.
Right. That kind of mixed signal in crypto often creates more idiosyncratic moves in certain stocks instead of a broad market effect.
Quick reactions.
Big breadth improvement today. That's important. Small caps actually participated, which gives more credibility to the rally than if it were mega cap only.
Small cap participation matters.
From a technical standpoint, the S&P move cleared some near-term resistance that had capped rallies lately, and the NASDAQ pushed toward a series of prior short-term highs. Momentum indicators were pointing higher in the short run. But, and this is a big but, the market stayed reactive to news and headline risk.
Right, so the setup looked constructive but fragile.
Exactly. Now, for listeners who want the practical watch list, number 1, earnings cadence. Upcoming reports in tech, retail, and industrials will tell us if this rotation has legs or if it was mostly a relief bounce. Analysts note guidance will be a key variable.
Number 2 was Fed and macro data. Jobs, inflation prints, and any Fed commentary were flagged as the pivotal inputs for rates and volatility.
Number 3, geopolitics and commodities. Any fresh developments in the Middle East or supply stories around oil and critical metals could swing energy and materials fast.
Number 4, MA and activist flow. Deals and stake moves create pockets of idiosyncratic volatility.
And finally, options implied volatility on the NASDAQ and net positioning in small caps. Those are useful reads on conviction. To explain simply, options implied volatility is the market's expected swing. If it falls, traders are saying they expect less drama. If it rises, they're bracing for bigger moves.
Yeah, that's a good, simple explanation.
So where did that leave us at the close? Markets closed up, tech led the charge, breadth was healthier than recent choppy sessions, and small caps joined in. Analysts suggest the move reflected rotation out of some mega-cap defensives and into cyclicals, semiconductors, and energy.
But a reminder, if macro prints worsen or geopolitics flare, that rotation could reverse quickly.
Exactly. History shows rallies driven by narrow catalysts can be fragile if the macro story shifts. So the immediate bar is whether earnings and upcoming data validate this rotation.
Quick takeaways?
1. The market closed higher with a clear tech tilt. NASDAQ outperformed by about 2.5%. 2. Semiconductors, materials, and energy were the key contributors, and small-cap participation made the rally more credible. 3. Macro calm and MA chatter helped reduce risk-off pressure, but headline sensitivity stayed high. 4. Watch earnings, Fed, and geopolitics for whether this rally sustains. Analysts note these are informational points, not personalized advice.
Nice summary, short and usable.
All right, that's our wrap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap.
Catch you next time. Stay curious out there.